So I think over the last few years, there's been a distinct and a significant shift in the kind of needs that HNIs have had, right? It's also a function of the kind of options that they have available with them. So if you rewind 15 years back, you would see that the options available were fairly limited, and in terms of the number of distributors that were offering those kind of products was also very, very limited. So from that perspective, things have changed quite significantly. But that's also led to a situation where there has also been mis-selling on account of that, because in the 2003 to 2008 run, there were a number of new distributors, new advisors, so-called advisors, who came on and missold, and therefore there is a significant amount of trust deficit, so to say, in the amongst the HNI segment, right? But in terms of their needs, the need remains to sort of grow money, to preserve money, depending upon which stage of life you are in, right? That has fundamentally not changed, but in terms of the options that are available to investors, that's changed quite significantly. And of late, you're also seeing a number of newer financial products that you were not seeing, let's say, even 5-7 years back. You didn't see the number of products that you see today. So I think in terms of the options available, it's changed. In terms of the need of the client to buy into a product which was largely restricted pre-2000 to, by and large, to real estate and fixed deposits, that's opened up quite significantly. So that's a difficult question to answer. But having said that, I think there are some obvious answers, right? I mean, you've seen this new investment vehicle, which is in the form of alternative investment fund, which has been active now for the last, so as a category, it's been active for the last, let's say, 2.5-3 years. You've got over, let's say, 100-odd funds, which are 100-odd alternate investment funds that are there, in the market. So there is a lot of innovation that happens in that space, given the fact that it is meant for sophisticated investors, given the minimum ticket size being 1 crore. There is a lot of innovation that can happen within that. So let's say 3 years back, we wouldn't have heard of a long short fund, for example, right? 3 years back, you wouldn't have thought of a high yield credit fund, right? So those changes you're already seeing, right? You will see more of those as we move forward, right? Both on the fixed income side as well as on the equity and derivative side. One new class of investment or one new product class that should emerge. Right now, real estate investment is restricted either to physical real estate that you invest in, or in the form of non-convertible debentures issued by these real estate companies, or in the form of real estate funds, which is a mezzanine debt fund or an equity fund, a real estate equity fund. REITs, which is, there was a notification in the recent budget as well, that will emerge as a fairly, significant product, as times unfold. Of course, it's a product which is meant for investors who are reasonably conservative, who are looking for a steady state of income, steady stream of income, and therefore it's meant for a certain kind of investor. I think that can potentially be a fairly large mobilizer of assets in the next 3 to 5 years, other than the ones that I mentioned earlier. REIT is essentially, and there are different kinds of REIT, but the REITs that are more popular are essentially a basket of rent yielding properties, right? That's about it. And 90% of whatever yield that you generate out of these properties in the form of rental yield has to be distributed, right? So by its very nature, as long as the quality of the assets that are being purchased under the REIT, or the quality of assets that are sitting inside the REIT, are tenanted with marquee tenants or high quality tenants, and as long as the quality of the property is of a high order, you shouldn't see that level of risk. Having said that, it is not a product that is meant for everybody. While I think it will become more accessible, given the fact that the minimum ticket size in that is 2 lakhs vis-a-vis, let's say, a PMS where the minimum ticket size is 25 lakhs. So it will be more affordable, right? So the entry barriers to participate into REITs are going to be lower. But you need to be careful about who you are investing with. What kind of REIT managers are you investing with? Do they have experience in managing a basket of leased assets? Because That in itself is a fairly complex task. It requires experience, and there are firms which have experience, like firms like ours have experience in running a REIT overseas. So Religare has one of the most popular REITs listed in Singapore exchange, right? So there is experience within the firm, and so you need to make your choices carefully. I think it will emerge as a significant opportunity and a significant product class. How large, I think time will tell, and of course regulations will have to get even clearer for that to become a significant opportunity for